Hi. So I looked at the list of names for today's event, and I thought I don't actually know many people here. I looked around the room, and there seems to be a lot of reasonably familiar faces, and I don't know whether that's I'm getting old and so I can't remember people's names, or whether we all look the same in the conservation sector. So one or the other. But it's good to be here, and if I have met you before, I look forward to catching up. So I'm Alan Law. I'm an executive director at Natural England. I'm not going to give you background on Natural England. I hope you know who we are and what we do. As Chris said, I've been around in conservation for 30 plus years now. I'm not an economist, and I'm not a finance specialist, but I hope I've got a perspective here that will add to the sessions that we've had so far. And I'd really like, whether it's prompted by this presentation or thoughts that you already have, to get your feedback around what role you think Natural England ought to be doing, could be doing, in relation to driving green finance and increasing supply of green finance. I've got a colleague here, Phil Denham, who some folk may know. Going to give us a wave, who's going to be here today. So if you don't catch me, please catch Phil. So I'm going to start as traditional with conservation talks. A quick word about state of nature. I don't think anyone's going to be surprised in the room when we think about the state of nature in the UK. We're one of the most nature-depleted countries in the world. We're the bottom of the G7. We are in the bottom quartile of the bottom quartile of countries across the planet when it comes to our state of nature and biodiversity. And by and large, the indicators are on downward trajectories at the moment. So that's not a great start. Range of causes here. We can point to development, we can point to agricultural intensification, pollution, baked in climate change, etc. Why does all that matter? Well, it probably matters to everyone in this room because of its intrinsic value and things that we care about. But it matters to people, it matters to planet, it matters to economy. It impacts ultimately on everyone and everything. And the point I'd like to sort of conclude on this slide is, of course, that all of that downward trajectory, historical or current, can be traced back to the activities of businesses and then ultimately the choices that we all make as consumers of products and services from those businesses. So this all comes back to companies and consumers and the choices that we make. So what do we need if we're to do something about that in the UK? Now, you'll have to bear with me because this is an oversimplified view of a very complicated picture, but I boil it down to three things. So the first thing is we need to operate at a ecosystem or landscape scale. Historically, conservation practice in this country has been focused on individual sites, individual species, small places, concentrating on the micro. We need to step that out and start to plan, evaluate environmental pressures, and plan for responses at an ecosystem scale. Secondly, we need to have land. So you can't plan and deliver nature recovery if you can't release land. You can't release land, and you won't be very successful with green finance initiatives if you're fighting against a system of perverse land management incentives that don't drive towards release of land for delivery of natural capital improvements and delivery of ecosystem services. So we have to follow through on the agricultural transition, and we have to release land for uses that are optimal for UK PLC. So that's the second step. These three are all interconnected. And the third one is we need to have a system of standards and regulation that guides both where and how you deploy public funds, but also what the standards are for private companies and private investment. Now, those three things are, of course, linked. So we need to have spatial plans for where and how you go about restoring ecosystem health and creating resilience. You have to be able to release the land in the right places, and you then have to provide the cash, whether that's public, private, or a blend of the two, to deliver that. Green finance can complement, but it has to be in accordance with the plan, and if it's fighting against perverse subsidies, that is the proverbial pushing things uphill. So we've heard a little bit about government's finance plans. I'm not going to sort of repeat what Dan said. A couple of things that I'd observe here. So one is we've got different figures. So some of the figures that I've been given are sort of quoted are 20 to 40, 20 to 50 billion pounds funding gap. Dan described a slightly larger figure. That may be slightly different timeframes that we're talking about. But the range between 20 and 50 is a pretty large range, isn't it? And of course, how you go about delivering nature recovery depends on some of the assumptions that are baked into that. So one observation would be that the unit costs of delivering nature recovery, if you adopt a land spare approach at scale, are likely to be much lower than the unit costs of trying to deliver it through a land share approach. Now, there's political arguments around whether that's acceptable or not, but I think that's going to be a hard economic fact in many cases. Similarly, if we adopt a rental approach as opposed to a capital purchase approach, I think we'll end up with very, very different figures. So there is something for the UK at policy level, but with the wider sector, to think about that funding gap, which is real, and as Dan says, it's not going to be filled by the public purse. What's the most cost-effective way of delivering the outcomes that we need? We know it's going to be more than the 0.5 to 1 billion fund that's down in government's targets, but we're going to have to think about how we get the most impact out of the money that we bring in. A little graphic that sets out what describes as the maturity of different green finance streams that are there at present. I put emphasis on saying maturity because if you look at the green blobs there, you might be tempted to assume that because they're 3/4 green, that means it's 3/4 all good and dandy, and I don't think it's anything but. It's relatively mature compared to what's elsewhere. My observation around this slide is that what we see at the top, arguably, are those areas that are most regulated being most mature, those areas that are least regulated being least mature. But what we also see is those areas that have the potential for the greatest funding contribution, the greatest impact potentially, are also in the less regulated space. So I'm not making a political statement here, but I think you can draw some conclusions from that sort of graphic. What we're going to need to see here is a combination of greater support for regulation in terms of supporting some of the green finance markets, and I think also greater imagination around where and how we might seek to pump prime and stimulate markets. So at the moment, I think there is a greater emphasis on markets finding their own level and getting established themselves. There's a relatively non-interventionist approach that's being taken by government in terms of identifying where markets are and then seeking to actively stimulate them by providing, for example, long-term financial guarantees. This is a nice little slide that sort of sets out so what have we got here in terms of economic activities, and how can we translate that into what we want to see here? And a central theme of what I want to say today is about the importance of local nature recovery strategies. And this comes from pilot work on the local nature recovery strategy. Back to my three themes. We need to be able to plan at a landscape stroke ecosystem scale. Now, county boundaries aren't ecosystems, we know that, but they're a better proxy than doing it at a micro scale. And I think there is a variable level of ambition and buy-in around what we want to see from local nature recovery strategies. I think the concept of a nature recovery network formed by local nature recovery strategies to a broadly common standard is absolutely transformative in terms of domestic nature conservation, and it provides the basis for what we need to see. And my plea to people and organisations in the room today is to make sure that our organisations are all investing in these things as central to identifying environmental pressures, but also identifying where and how we actually need green finance to flow in a way that's going to be coherent and complementary to public finances. So our ambition here, very much as Dan described, is around that integrity of market and having the right sort of spatial framework to target that market, the right funding tools alongside it. So local nature recovery strategies, we've got those being driven on the back of the Environment Act. There's work that's being undertaken in DEFRA on the development of a land use framework. Land use framework will also help clearly sort of guide some of the choices that are made around different types of land opportunity. We've talked, we've seen earlier on about references to natural capital funding, the Nature for Climate Fund that was referred to earlier. There are different choices around how some of that fund can be applied. You can apply it from a relatively short-term perspective, in which case you go and plant trees, and you plant the fastest growing trees to generate a short-term return. Or you can deploy that investment fund in a longer-term place around locking carbon away for the long term through peatland investment. A land use framework would help us guide some of those choices and make sure that we're getting that balance between short and long term absolutely right. What we are starting to see is monies coming through for green finance in areas that are familiar and regulated. So we've got down here the nutrient mitigation scheme, nutrient neutrality mitigation scheme, which gets money from house builders, and we've got the emerging market that's going to come under biodiversity net gain, both prescribed and regulated by government. So here, we've got some very nice graphics in here. So a nice model of what we would like to see. And of course, the challenge is the gap that we've got here is in that bottom left corner. That's the bit that we need to see being filled out. The risk is that we find things working rather like this, because we don't have the system of standards and a clear operating framework for green finance to flow. We can find perverse choices being made for good reason and bad, because there isn't a guiding framework. So we can see land being acquired at the moment on speculative value to deliver environmental improvements. And those environmental improvements might be worthy, might be worthwhile, but are they actually the right measures in the right place? And by being put in sometimes in the wrong place, are they pushing up land value, land prices, and are they reducing the options available to delivering the services that we actually want to see in the right place? So that lack of an overarching framework to operate within creates challenges. So that's what I was going to summarise in this slide around some of the challenges that we face. We've got challenges around land being used sometimes in the wrong places. We've got challenges around uncertainty in the system. So Dan described some of the rules around stacking and bundling, guidance around stacking and bundling that's come out. There's still questions around tax. There's still questions around future of public incentives. And that's leading to reticence amongst landowners in terms of making some of their long-term choices. And there's also questions around whether, if we follow through the logic around TNFD, does it lead to a situation where landowners are effectively required to retain their carbon assets on site in order to mitigate their own carbon footprints and reduce the potential for environmental trading of one sort or another. Some sort of concluding reflections then. There's lots of positives. So there's clearly an appetite for a range of environmental markets. There's clearly lots of capital out there. You speak to investment funds, and the sums that they have potentially available to invest in are eye-watering, far more than we actually need to deliver the scale of investments required here, but they're waiting. They're waiting because there is a lack currently of clarity around standards and a regulatory framework to operate within. So they're waiting. We've got good examples of where investments in enhancing nature can be effective in terms of preparing the market. The Life Fund investment in peatlands here is an example of that. We know how to do nature recovery if we have the right money available to us. So there's a lot of opportunity, there's a lot of interest, and there is a sense that this will happen one way or the other. Concerns, though, that the lack of that regulatory framework to operate within means that investment is undertaken in a piecemeal, ill-coordinated way that doesn't make the most of the money that's coming in and, at worst, creates perverse outcomes. So what's needed? So my ask of the conservation sector is to unite around the Nature Recovery Network and local nature recovery strategies, and to make sure that they provide that effective planning basis around where and what we need green finance to be invested in, so that they set out spatially, explicitly and thematically what we need that green finance to come into. And the ask of government would be that we need to get more ambitious early around the regulatory framework that we operate to, and the standards that we expect business to operate to, such that we can help steer that green finance market in accordance with the design that the conservation sector has put in place. Thank you.